There is a massive lie circulating in the trading world right now. Search for AI trading on YouTube, and you will see thousands of videos promising black box trading bots, 99% win rates, and effortless passive wealth while you sleep. Here is the cold, hard reality. 95% of those fully automated retail trading bots will blow up your account the moment market conditions shift. This happens because market volatility does not follow a linear path, and rigid algorithms fail silently when liquidity dries up or high-impact economic news releases break out. However, ignoring artificial intelligence entirely is just as dangerous. Wall Street algorithms execute over 70% of total volume on major exchanges, and retail traders who learn how to leverage AI as an assistant are quietly pulling ahead of everyone else. The secret isn't replacing your brain with an automated system. It is using AI as a co-pilot. While a bot takes blind, automated control of your capital, a co-pilot handles the heavy lifting of data crunching while leaving the final execution decision in your hands. To build a real edge today, there are 3 practical ways you can integrate AI into your trading strategy without risking your capital on unproven algorithms. First, use automated pattern recognition and multi-timeframe analysis. Instead of spending 2 hours every night drawing trend lines and hunting for supply and demand zones across dozens of charts, AI chart engines scan multi-timeframe structures in milliseconds. They process market data without emotion, completely removing human confirmation bias before the London or New York session opens. Second, utilize AI for behavioral edge and journaling. Your biggest enemy in trading isn't the market, it is your own psychology. Modern AI journaling tools don't just record your entry and exit prices. They analyze your actual execution habits over time. They highlight subtle performance flaws like revenge trading after a loss, taking early profits due to fear, or over-leveraging when you feel overly confident. It acts as an objective performance coach that exposes your exact weaknesses with raw data. Third, leverage AI for strategy variation and instant backtesting. Backtesting a strategy manually across 5 years of historical price action takes weeks of repetitive work. AI allows you to input your course setup, for example, a liquidity sweep followed by a market structure shift, and run dozens of strategy variations instantly. It tests different risk-to-reward ratios, stop-loss placements, and trailing stop rules across multiple market regimes so you know your exact mathematical expectancy before risking a single dollar. Will AI completely eliminate human traders? No. Markets are fundamentally driven by institutional liquidity flows, human emotion, and unpredictable geopolitical events. An algorithm can calculate probabilities based on historical data, but it cannot adapt to structural market regime shifts the way a disciplined, flexible human mind can. The future of trading isn't AI versus human. It is a trader using AI versus someone relying strictly on outdated manual tools. Focus on building a mechanical strategy with strict risk parameters, and let AI speed up your analysis, fix your discipline, and refine your edge. If you found this breakdown valuable, drop a like and comment below. Are you currently using AI tools in your daily setup, or keeping it strictly manual? Subscribe to the channel for more direct market insights, and I will see you in the next video.